Hi everyone, this is Bag It On, Stock Market Caddy. It is May 8th at about 11 p.m. I'm sorry I didn't get this out to folks. I promised the folks in the bleacher seats, the subscribers get their video each and every night. The folks in the bleacher seats get a video when we can get it out there. So we try to do that as a courtesy, and one day we hope that we can help the folks, even in the bleacher seats, get to a point where their confidence, their account, and their time is such that they can move down in and get into the box seats and get a subscription to somebody or to a mentor. It's not just getting a subscription; it's finding a mentor, someone that's willing to teach. There's a lot of people, selling subscriptions and things of that sort. Very few willing to teach, and that's what we love to do. Let's take a look at our proprietary indicators. This strategy, stop levels 1 and 2, the weather, the slope rating, wind direction, fairway width, and individual clubs. Yes, is there a golf theme? Absolutely. What the crowd is doing, what the early birds are doing. Do you have to have played golf to follow this? Absolutely not. We just try to make it fun. That's all. And rather than just putting up there a bunch of numbers, the numbers do mean something, but we've translated those numbers into categories, into English, into color codes, and into indicators that complement each other. None of these indicators are duplicates. None of these indicators fight each other. So many people will, get on their first E-Trade account, a Schwab account, and they throw up all these different indicators and all these different time frames, and they all fight each other. And it's no wonder they get confused. We also look at 60-minute, 240, daily, weekly, monthly. Our favorite time frame is generally the 60, 240 in the daily, but we do have investment funds on a weekly and monthly, and this would be the investor class. Nothing wrong with that. Even the investors, though, need to know when to, be adding money to accounts and when to be getting out or getting protected. Why not? Now, let's take a hard look at this. There is something going on in these markets that has us a bit puzzled. The markets, as you know, have been written about here for months or years with the distortions of the Fed, but something is going on here that has us concerned, and it's this. We have the Russell. The Russell has been in a short mode for some time. This is the speculator class. And this is generally referred to as really the smart money or the fast money. The daily has been in a short mode. Even the hourly time frame has been short, and the weekly is flat. The monthly is showing rain, reversing down, headwind, what we call a TFS. So it looks like if the Russell is to get a bounce, it'll probably be short-lived, and then we think the Russell will collapse. The NASDAQ has also been in its own correction of sorts, and it was these two markets, the Russell and the NASDAQ, that led all the other markets up. Now the NASDAQ is beginning to flatten out, so we're beginning to think that maybe we're seeing the setup for a bounce or a little short squeeze. In what markets? The Russell and the NASDAQ. We think it would, if they do rally, that it would just be a short squeeze. So how do you play it? If you're a short-term 1-2 day trader, intraday trader, you trade it. You get in there, do your calls, do what you do every day, and exploit that. If you're a long-term investor or more of a swing trader, 2-3 weeks, I would stay out of it. It's not worth getting involved in. It's just going to be a short squeeze. Probably won't even make it to the top of the range, and then she's going to fail, in our view, and turn right back down. The two strongest markets have been the ES. She's flat. She's yet to really get short, which is amazing with the damage that's been done in the TF and the NQ. So she's been relatively, on a relative basis, strong, but we are seeing the hint of reversals down. So, and then the YM. The YM has been even stronger than the S&P. You can see it here. We have the hints of a reversal down, but this price level is hanging right in there. What do we think is happening? We think that money is transitioning out of the risky assets moving into what they perceive to be safe assets in the S&P and in the dividend paying Dow. Now the same thing happened back in 2000 when the Nasdaq was, run to 5,000. It was the Nasdaq and the Russell that got hit first. And then they told everybody, buy the blue chips. They bought Lucent. They bought which was at the time the most widely owned stock in America. In the end, if this is a correction or something worse, they will get them all. I just don't know yet, and I'm going to point something out as to why, that if that's here yet. We don't think so, and I'm going to show you why. Lucent, by the way, doesn't exist any longer. Isn't it amazing? Went from the most widely owned stock in 2000 in America to not even existing. The problem with everything that's been going on is the VIX, is the volatility index. Now we know this market indicator, which can be traded, is targeted by the Federal Reserve and the banksters. They know that computerized traders, folks like us, key off of the VIX, and it's where people buy their protection. It is a contrarian indicator. So if the market was really bearish and really defensive, we should be seeing the VIX in buy modes. Now we're getting a bit of a tailwind, but we're just not seeing it. It's amazing. So it's being hosed down. They're trying to keep everybody calm in the back of the plane. So if this does not, if the VIX does not spike here soon, I'm talking in the next, 1-2 days, then I think we're setting up for a bounce. It'll just be a bounce. You want to stay tuned to the VIX though. If the VIX should pop or accelerate, then that would be a cue that more is on its way. And it'll be the Russell that breaks the 108 or the IWM, the 108 figure. The cues will get going. If you're in those shorts, you'll ride them. If you hedge them, you could take your hedges off. If you're looking to initiate a short, what markets would I go after? The S&P, and I would go after the YM, the Dow, because the risk reward is much better here. These markets have yet to even pull back, so you wouldn't be risking a whole lot to make a whole lot. That's how we always look at it. So we'll need to see what happens here in the next really, I say 48 hours. Yeah, Monday, tomorrow's close, going into the weekend. How are the market players feeling or positioning themselves? And then Monday, if this does not spike up, then I'm afraid we're going to get a bounce. And I'm afraid it is what it is. We can only follow the money flow. It could be a wonderful thing, because if we do bounce from here and we run back up to the top of the ranges and blow everybody out, and then it fails, there's going to be one hell of a trade going on. But that's what we're seeing. That's what we're paying attention to. And we just, as you know, we trade our mechanical systems. So folks ask us, and they've complimented us, and we thank you. I think it's Red Mud Trader. I'm not sure where he's out of. We thank you. Willie, of course, California, we thank you. We hope we're helping you out. Sometimes you'll ask us about what we see from the market. So we always, it really depends on the time frame. So I'm hesitant to to tweet out what we're seeing, because I'm not sure if folks will misinterpret the time frame. We'll try to distinguish if it's an hourly or 240, and then you have to realize that is just that. That's the time. If that's the time frame you go in, that is the time frame you go out, or less. That's usually a safe way. Even if you go in on a daily trade, if you come out less than that, that's good. What you don't want to do is you don't want to get into a 1 hour or a 240 trade. It goes south on you, and then all of a sudden it becomes a daily trade, and then God knows, a weekly or monthly investment. Oh, she'll come back. Okay, that's how people in this this garbage that they were chasing, they're down. Kramer recommended, I think, Zulily, symbol ZU, back in March. The thing is down 60%. You need 120-30% return to just get break even. I remember talking to folks about good old Lulu, the yoga pant. They said, oh, they always come back. They come back. Okay. The thing's down, I don't know, 50, 60%. Maybe it comes back. Maybe it goes to $2. Maybe it goes out of business. Um, they evidently weren't around for 2000. And that's the problem. A lot of folks, their sense of history, their student of history is only the lifetime in which they've lived. We are students here of the market. If anyone ever wants to know the books that we read, have read, some great books. The Creature from Jekyll Island, highly recommend. David Stockman's book, The Great Defamation, fantastic book. All of the Currency Wars book, whose author eludes me at the moment. But anyone who wants a bibliography, just let us know. We are very much students of the market and of the world affairs. It makes it interesting, and at the same time we try to make it fun. So that's what we are seeing. All quiet right now, and of course, all the news about Russia and all of that. That's fine, but the people with money aren't reacting to it. So that's all we're interested in. It's interesting. We need to pay attention to it, but when they start voting with their bucks and start getting their insurance on, then we'll know that the hurricane is coming ashore. But until then, good luck. Be careful. Any questions or if we can help anyone? My caddy Sue, my beautiful wife Susan, also is helping folks write code and develop a trading style, develop a trading methodology. We're happy to do that. Of course, it's a lot easier if you're on TradeStation because that gives you the capacity to do things like this. Good luck, be careful, and let's see what the morning brings.